Yes, so we are going to look at accounting for cooperatives. So it's one of the areas under accounting for different entities under financial reporting. So whereby in this case, maybe you might end up having to look at maybe accounting for farm work, or maybe agricultural work. But for today, we'll be able to look at accounting for cooperatives. So when you talk about a cooperative, so this is actually an entity that is actually formed under the Cooperative Societies Act. So it is an entity, it is formed. So part of the key points to know about accounting for cooperatives before we go to the specific accounts to be maintained. So it is formed under the Cooperative Societies Act. It is formed under the Cooperatives Societies Act. Specifically, it is an act of 2008. Specifically, it's actually an act of 2008. So these kind of entities, they are majorly formed to serve the members. So they are simply members who have like a common purpose, who end up having to come together. Then they form an entity we are calling what? A cooperative. In most instances, they're usually formed by persons who are of the same trade. Maybe we can be able to say the same profession. So let's say, for example, in this case, you find that probably we can have people having to come together because they are practicing the same trade. They come up with, for example, maybe a circle, or maybe in this case, they come up with a cooperative to maybe just serve their interest. Maybe it could be specifically, maybe in this case, it can be, let's say, for example, farmers. It can be farmers. So these farmers, maybe they're involved in coffee farming, or maybe they're involved in maybe tea farming, or maybe any other kind of activity, or maybe it could be dairy farming. So simply because they have like a common purpose, then they can be able to come together, form a cooperative to be able to serve their interests. So cooperatives majorly in this case will end up having to focus so much on having to serve their members. But of course, making profit for them will just come as what? Maybe a secondary objective. So cooperatives, they have like similar, for example, features about a company, whereby in this case, they'll be seen to be a separate entity, or maybe in this case, the members, separate entities from the members. Then, of course, now in this case, they can be able to maybe own properties. They'll be what we call having to be succeeded, or what we call perpetual succession regarding cooperative societies, cooperative societies. So there can be succession, there can be ownership of property by these cooperative societies. So before we look at, for example, the accounts to be maintained, then we have different types of cooperatives that can actually be formed. So the different types of cooperatives that can actually be formed, or we can be able to have in this case. So the types of cooperatives, societies, types, so some of the major types of cooperative societies that can actually be formed. So we can be able to have in this case maybe what we call primary societies. We can have primary societies, or we can have in this case cooperative unions, or maybe apex. So cooperative unions, unions, or maybe in this case we can be able to have another type we call apex cooperative societies, apex cooperative societies, apex cooperative societies. Yeah, I'm not audible enough, so I don't know. So I can be able to see Jumba is saying I'm not audible enough. So maybe the rest can be able to confirm. Currently, am I audible enough? Yes, I can be able to see you are saying loud and clear. So I can be able to see OG says loud and clear. So when you talk about, in this case, primary cooperative societies, so these are basically formed. So they are formed by a minimum of 10 members, a minimum of 10 members who have, like in this case, a common purpose, or maybe what? A goal. So primary societies, so the most common ones now in this case, they are simply formed by a minimum of 10 members And as we've already been able to say, cooperatives will be formed by persons who have like a common interest or maybe goal. So in this case, they feel like when they come together, they'll be able, for example, in this case, maybe be able to source for more resources in terms of maybe grants from the government, in this case, to be able to support their activities. So through the cooperative movement, then in this case, they can be able to end up having to get maybe easy markets or having to access markets very easily for their products. For example, if they are tea farmers, then in this case, when they come together as a cooperative, then in this case, they can be able to maybe come together, ensure that in this case, maybe they sell their product to maybe a particular maybe organization, or maybe in this case use organizations to be able to sell their products, and therefore in this case generate revenue for them and even get subsidized inputs. So the most obvious ones formed in this case, they are primary societies. So they are formed by a minimum of 10 members, so who have like a common goal, so to be able to, for example, fulfill their interests. Then we have cooperative unions. So these are simply now primary societies. So primary societies, these are primary, they are now these ones that are basically to form a union. So for example, now in this case, we can have these primary societies having to come together. In this case, have like an umbrella body that in this case will be able to, for example, oversee their maybe activities. So that umbrella body or umbrella union that will be able to oversee the activities as primary cooperatives, we can refer to them as cooperative unions. Then in this case, we have apex. So these are simply formed. So they are formed to promote. They are formed to promote growth, promote the growth of the cooperative societies. They are formed to promote the growth of the cooperative societies. So these are some of the types of the cooperative societies we can be able to have. So in this case, now the types of accounts. So the types of accounts that will likely be maintained. So the types of accounts that will likely be maintained, or some of the accounts or books of accounts to be maintained regarding the cooperatives, then we'll have three major ones. So the most obvious one, I think you've already been able to come across. So there'll be the maintenance of what we call the income statement, There'll be the maintenance of the income statement. So we can have the income statement, then we can probably in this case have number 2, an appropriation account, Then number 3, quite obviously, then we'll be able to have what we call the balance sheet, or maybe the statement of financial position, or maybe in this case, sometimes you refer to it as the balance sheet. We refer to it as the balance sheet. So these are the 3 major books of accounts, or maybe financial statements to be maintained by a cooperative society, So in this case, when you talk about the income statement, then in this case, we are talking about it having to, at the end of it all, show how much has been realized as a profit, by the cooperative society. So it will be able to enlist probably like the incomes that have been realized by the cooperative society, and of course also the expenses that have actually been incurred by the cooperative society. So when you talk about, in this case, for example, the incomes, so the incomes here, basically, we could be talking about maybe they have like kind of activities whereby maybe they end up having to charge like maybe entrance fee of the members, for the members. So that basically will likely also be included there. Part of what also in this case can actually be an income. It can be, for example, if they have done some kind of like investment. So maybe in this case, they have invested in government bonds. So we can be able to have, in this case, for example, investments. So it can be bonds, it can be treasury bills. So it can be investment in fixed deposits, so they are getting interest. So that is still likely like an income to this cooperative society. So that will be part of that. Then sometimes if these cooperatives are like maybe SACCOs, then they'll give out loans to the members. So when they give out loans to the members, then they'll be able to get what we call interest. So they'll get interest from members. So this one still will likely basically be categorized as part of the income. So those are just but part of what in this case would be the income, for example, these cooperatives. So when you talk about the expenses, so of course now in this case, if you are preparing your income statement, you'll most obviously add that. Then of course there'll be expenses. So the expenses here could be, for example, in this case, maybe administrative expenses. So whereby in this case, you're talking about having issues like maybe salaries, administrative expenses, which could, for example, in this case, include maybe issues like rent, maybe salaries, etc., amongst others. So these ones will be part of maybe the expenses that will likely be being cut. Then, of course, you have any other expenses that they might end up having to incur, which you'll be able to see as you'll be looking at the example. So we can have other expenses. We can have other expenses also. In this case, that would have been incurred. So if you get the difference now between the two, this one and this one, then of course now in this case, obviously we'll be able to realize the profit realized at maybe the end of the year by the cooperative society. So this profit realized here, then there'll be what we call an appropriation. So it has to be appropriated. Maybe out of this profit, probably there are some amounts they could actually end up having to pay as maybe dividends. Or maybe in this case, like if they are SACCOs, they pay dividends. Then of course, now in this case, maybe they pay interest to the members. So we can be able to have the appropriation account, which will be able to appropriate this particular profit. So once you have the income statement, then in this case, you'll move this particular profit here to the appropriation account, which will end up having to appropriate. So maybe in this case, distribute. So you can distribute it in form of maybe dividends to the members, or maybe in this case, interest to the members. So in this case here, you'll be able to start probably in this case with the profit for the year. So that will be the profit for the year, which is actually what you've been able to realize here. Then now you distribute it or maybe appropriate it. So you can be able to you'll be able to less what you're calling dividends. You'll be able to less what you're calling maybe dividends to the members or something. So you'll be able to reduce it there. Because dividends paid, the interest paid, you'll be able to reduce it there. Then still at the same point of appropriation. So there's something I've been able to mention that in this case, for cooperative societies, they're actually formed under the cooperative societies. So that is the regulation, or basically regulations to be conformed to. So part of what I can also be able to mention at this particular point in time is that cooperative societies are being called upon, in this case, to ensure they transfer part of their profits to what you're calling to reserve. So they transfer part of their profits to what we call statutory reserve. So there'll be a transfer, less transfer to statutory reserves. So it is a reserve that in this case is called upon to be maintained by the statutes or by the act. So to statutory reserves. So that will likely be like 20% of the realized profits. So it's actually normally 20% of these realized profits. Is the requirement that in this case they transfer them to the reserves. So then once you've been able to, for example, now appropriate them, then you'll have the profits realized. The profit carried. You'll have the profits actually been carried forward for that particular year. So it will be the profit realized here plus the appropriation, then you get the profits at the year end. So one, ideally, where do you move it? End up having to move it into the balance sheet or the statement of financial position as part of equity. So this profit that is carried forward at the end of the year will basically be part of the items of equity, will be part of the items of equity. Then quite obviously, in the balance sheet, of course, I know you already know. In this case, you're basically able to enlist what are the assets. most obviously we'll be talking about assets here. There are, for example, motor vehicles, all those ones. So to have the current ones and current ones, or current ones and current ones. So you'll have here the assets. You have here the assets, the assets, the assets. So part of what is actually also very key here, you'll be able to realize that in this case, maybe sometimes this cooperative might actually ended up having to give loans to the members. It has given loans to the members. So if it has given loans to the members, then of course this one will basically be part of the assets of that particular cooperative society. So we'll have assets which will be able to talk, and of course in this case we'll have equity and liabilities, equity and liabilities. So part of the equity and liabilities are these reserves. You can be able to have the reserves, and year-end profit at year, which is this one. You'll be able to move it there. You'll be able to move it there. You'll be able to move it there. Then of course we can be able to have now other liabilities. You can be able to have other liabilities. You include them there. Then of course you'll be able to have your balance sheet. You'll have your balance. So part of the assets, or some of the kind of assets that in this case will be in a cooperative society, you're going to see them as we look at the example. So these are the key books of accounts, or maybe financial statements to be maintained by a cooperative society. So take note in this case, you're able to see income statement, then you do the appropriation. Then in this case, you can finalize by having to prepare the statement of financial position. So straight away, in this case, we can be able to look at an example or a past question regarding cooperative societies. So we can look at an example regarding cooperative society. So an example or an illustration regarding how, in this case, you'll end up having to prepare the financial statements of a cooperative society, So I don't know if you people have the past papers. So let's see whether people here have the past papers, because I want us to look at an example. I want us to look at an example. It is December. 2022. December 2022. Question number 2. So let's put the chart whether people have paper, so that in this case we can know whether we are on the same page. Through the chat, you can be able to confirm whether you have the past papers. Just confirm through the chat whether you can be able to access that past paper. Are you able to access that past paper wherever you are? Are you able to access that past paper? So at least I should be able to see 1 or 2 people having to say they can be able to access. So if you can't access, then I think we can look for a way how you can be able to access. So we can be able to maybe share. So confirm whether you are able to access it, so that we can move together. Gifted. So gifted. Are you able to? I can see Comrade OG says yes. So at least we should be able to see a number of people having to say yes. They are. I can see Jamba says yes, they have the past paper. Anyone else? Those are 2. So 2 out of 20, very few. 2 out of 20, very few. Kindly share. So can be able to see Guitar is not able to kindly share. So I don't know whether I'll be able to access it right now. Let me see. I can see Judith says yes. I don't know whether I'll be able to access it right now. Let me see. If I won't, then I don't know how I'll assist those ones who can't access. Just give me like a minute. I see whether I can be able to share it. If I won't be able to share it there on the chat box, then you people will have to survive. You people will have to survive. I think someone has already been able to share. Thank you very much, Comrade OG. Thank you very much, Comrade OG, for having been able to share. So I think people can be able to download there. You'll be able to get it. You'll be able to get it. So that we can go through the question. We can go through the question. So, so December 2022, it says Marula Farmers Cooperative Society Limited deals in marketing of 2 brands. So hope everybody is there for us to go together. So Marula Farmers Cooperative Society deals in marketing of 2 brands of coffee. So that is Safi and Muzuri on behalf of what? Members. So you can do this particular cooperative society is actually basically dealing with markets coffee. So it simply means that in this case, probably it's person who form this cooperative society, they have a common goal of having to do what? Produce coffee. Maybe they are coffee farmers. So there are 2 brands in this case that are having to be marketed by the cooperatives. That is, as per the society bylaws, that is allowed 50% of the sales and Missouri for operations and pay the balance to the members. So the following trio balance was expected of the society as for 20. So they sell, they get money, but out of the money they get, in this case, 80% they end up to the members, but 20% they take operational activities of maybe this cooperative society. So part of what in this case they end up having to distribute will be 80% sales of these sales of the coffee. So the following trio balance was extracted from the society as of 31st of December 2021. So in this case we have Safi. So on the sale of Safi, so remember they're having to sell. So part of the expense they are having to put in car as they make the sales of Safi include marketing expenses, processing materials, processing wages. In this case, for the sales people, marketing expenses, processing materials, processing what? Then still on the same case, geo balance to members. That is money that in this case has been given out, money of the cooperative side, but it has been given out, passed out to the members of the cooperative society. So this is actually money belonging to the cooperative society because they are given out eventually the members able to pay. The members pay with the interest, then that's part of the income of the society. But this money advanced out as a loan will likely end up having to be an asset because it's their money. So that simply basically will likely be what? Be an asset to the cooperative society. So you can take note that in this case, that particular loan will end up having to be an asset. You can put in brackets asset or something. Then dividends from what? Investment. So dividends from investment, you can see exactly on the credit side of this trio balance. So that simply means exactly what income to this cooperative society. Accrued rent, so this basically rent outstanding probably at the end of the year. So that will likely be a liability. Then sundry provision, so that will still be a liability to the cooperative society. Then appropriation account. So can we see the balance of the appropriation account carried from maybe the previous year, or basically the appropriation account balance. That is 6,000. So that's the appropriation. That will be the balance brought down. The next step to appropriate like that. And then The statutory reserve fund, the revaluation reserve is actually 750. That is part of the equity, the balance sheet. So say in the equity matter balance sheet, we have what part of what will be there will be the reserves. Reserves here you can have the revaluation reserve, some assets were revalued. Statutory reserve fund. So you'll be able to say that according to the Cooperative Societies Act, 20% of this case, the profits transfer to the statutory reserve fund. So they have been transferring to this particular fund up to right now. They have 13.7. It means that as part of what you put in the equity part, the balance sheet, also still take the profits of the current year and add on top of this 20%. So we'll have to add 20% of this one. We'll be doing the appropriation. Then entrance fee. So that is part of share capital is equity, part of the equity in the balance sheet. Members, deposits. This is basically part of what the BDA capital. Is, for example, in this case, in a company, sell shares to be able to. But now in this case, for cooperative societies, how they end up having to raise capital is probably in this case, what? Membership? It can be membership fee. It can be a membership. Can be membership fee. So that basically will likely be part of what the equity. Then sundry creditors, most obviously you know. You as an accounting student, creditors, bank overdraft, that's on the other side of geo balance. So that is an interest on loans to members. So they gave out loans, they gave some. In this case, part of the loan, this debit out and got what interest. So that will be income. The basic incomes. Okay. For the income. Then we have traveling expenses. That is an expense. Committee members, for staff and committee members. Bank charges. That is an expense. Bank interest. That is an expense. Salaries and wages. That is an expense. Committee education expense. You can be able to see on the debit side. On the debit side. So in this case, and quite obviously, you've already been told that when we talk about, for example, assets. Assets. My sound. My sound. What about right now? Is it still shaky? Is it still shaky? Is it still shaky? My sound. Please confirm. Can see Sharon there says volume shaky. Check your sound. What about right now? Please confirm. It's okay now. It is okay now. It is okay now. It is okay now. It is okay now. Any other person to confirm? It is okay now. So I can see Comrade Oji says it is okay now. It is fine now. So hope what I've been able to say, maybe you got it or maybe you didn't get it. So hopefully you got what I actually said. So we are saying that bank charges, bank interest, salaries and wages, all those ones will be expenses because they are on the debit side of what? Of the trio balance. So in the trio balance, in this case, according to your financial accounting, you've already been told that in this case, all the expenses will likely be on the debit side of the trio balance, plus also what? Maybe the assets. Then printing and stationery, that is an expense because you can be able to see it is on the debit side. General meeting expenses, that is an expense. Members, education, entertainment, legal fees, cash in hand, that is an asset. So ile pesa uko nayo kwa mkono. So that is what? An asset. Then we have Wakulima Bank Limited Savings. So Wakulima Bank Limited Savings. So those are savings of the cooperative society in the bank. So it is money that is actually held in the bank. So that is what? An asset. Investment in Wakulima Bank Limited. So that is part of the investment. So investments are normally taken as what? As assets. They're normally taken as what? As assets. And for example, in this case, if you gain interest on investments, then it will be income in the income statement. But the investments themselves, they likely be taken as to be what? To be assets. Receivables are simply debtors. So that is an asset. Then office equipment is actually what? An asset. Then when you go to the additional information, so now in this case, you have to be very keen as to what is having to be said in the additional what? Information. So additional information number one, you are told Bora Limited markets Safi and Missouri brands for Marula Society. On 31st of December 2021, Bora Limited sold Safi and Missouri brands for $175,000 US and $115,300 US what respectively. Bora Limited remitted the above amounts to Marula Farmers Wakulima bank account on 15th of January 2022. So Marula Farmers Cooperative Society does not maintain a US dollar account in Wakulima Bank. So that simply means that all the monies for the cooperative society are maintained where? At Wakulima Bank, But the account they are maintaining there, it is not a USD account. It's not actually a USD account. It is probably in this case a Kenyan shilling what account. So they have in this case taken probably Bora Limited as an agent to support them in selling what their products. They have taken Bora Limited as an agent to support them in selling what the product. Remember, it is just a cooperative society of what coffee farmers. So, but of course, now in this case, they don't know how exactly they can be able to market their products. So they have ended up having maybe in this case to involve another body to support them in selling what the products. So they give them the products, then when they sell, they remit to them what the monies. They remit to them what the monies. So the exchange rates, number two, the exchange rates for the two currencies were as shown below on the respective what dates. So take note in note number one, they're having to say that Bora Limited remits the money on 15th of January. So the money is actually remitted when? On 15th of January. 15th of January. The money is remitted on 15th of January 2022. Then when you go to note number two, in this case, you are told the exchange rates for the two currencies were as shown below on the respective dates. So on 31st of December 2021, the exchange rate was actually what? 105. But of course, when they're having to remit the money on 15th of January, it was actually what? 100. It was actually what? 100. So in this case, as we'll basically ending up having to be computing how much was actually deposited. So the conversion rate in this case that we'll end up having to use is actually on that particular date, the conversion rate, because these guys are not actually maintaining, they're not actually maintaining a US dollar account, So we'll be able to use that 100 to transfer these dollars into Kenyan shillings to realize how much was gotten as revenue to this particular what cooperative society from Bora Limited, who are simply agencies having to support them in marketing their products. Then number three, the audit fee of 6 million is to be provided for. The audit fee of 6 million is to be provided for. So that simply means that we have in this case, probably we can end up having to start by having to indicate the key points there. So we've already been able to say that the conversion rate, so as per note number two, so the conversion rate of the cells, the conversion rate of the cells will be as that one that is actually under that particular date, which will actually be 100. Then when we go to note number three, so the audit fee of 6, is it 6 million? Is actually 6 million? Yes, the audit fee of 6 million. This one, you can be able to take note at this particular point in time. It will actually be an expense. It will be an expense. Still at the same case. In this case, simply because you're having to be told it is to be provided for. So they have just provided for it, but of course they have not yet, for example, been able to pay it. So it will also basically be recognized as having to be a liability. So of course, when you're having to say it will be an expense, it will go to the P&L. If it is a liability, it will also go to the balance sheet. So take note at this point in time that those two will basically end up having to affect the books of accounts in that way. Then number 4, staff salaries and wages amounting to 3.2 million had not been paid as at 31st of December 2021. So in this case, you have note number 4. So staff salaries. In this case, by the end of the year, they were yet to pay what? 3.2 million. So 3.2 million. They were yet to pay 3.2 million. So that simply means this one will likely end up having to be still an expense. It will still be an expense, but of course, as you note, these particular expenses outstanding at the end of the year. So they were outstanding at the end of the year. You have to take note whether in this case, for example, in the trio balance, we had another expense of what? Staff and salary. So when we start having to prepare the income statement, we'll have to confirm in this case whether we have any other salaries. So we'll add the one that is actually outstanding at the end of the year, but still at the same case, the 3.2 will actually be what? Be a liability. So remember, in this case, liabilities outstanding by the end of the year. So they'll basically end up having to be liabilities in the statement of financial position. So note number 5, what do we know? What are we getting about note number 5? So for note number 5, interest on members' deposits is to be provided for at 6.08600. So interest on members' deposits, still interest on members' deposits. By the end of the year, they have to provide. So it simply means it is still outstanding. They are yet to pay it. So that will be 6,086,000. So that should actually basically be noted quite this early. It is an expense they have to incur as a cooperative society. Still the same case, because they are yet to pay it, they have just provided for it, then it will also basically be recognized to be a liability. It will actually be a liability also in our balance sheet. Then note number 6, which we've already been able to mention, is part of the provisions under the Cooperative Societies Act. As per the relevant ministry regulations, cooperative societies are required to transfer 20% of their net earnings to statutory reserve. So, and of course, we've been able to say when you'll be doing the appropriation, then remember, you need to take 20% of the earnings they would have realized in the income statement. So remember what you're having to say when we started, that in this case, you'll do the income statement, then at the end of the day, you'll get some profit. According to the relevant requirements, you are required to transfer to the statutory. Just from the word statutory is a requirement under the regulations that 20% of these profits maybe should be put aside as part of the statutory reserves, maybe for future what? Eventuality. So we'll have to transfer 20%. So in this case, we'll be doing the appropriation. So for note number 6, remember, when we'll be doing the appropriation, we'll have to take what? 20% of the profits will be transferred. 20% profits should be transferred to, in this case, the statutory reserves. Statutory reserves should be transferred to the statutory reserves. So of course, we've already been able to go through our what? Our additional information. So what was actually required? Prepare the following financial statements for Marula Cooperative Societies Limited for the year ended 31st of December 2021. So A, Safi brand marketing account showing the profit or loss, Muzuri brand marketing account showing the profit or loss, statement of profit or loss for the year ended 31st of December 2021, then statement of financial position as at 31st of December 2021. So of course, in this case, they haven't called upon us to prepare another key account. You are calling what? The appropriation account. The appropriation account. So if this is the case, then it simply means that we'll be able to remember to do the appropriation as maybe part of the workings, so that in this case, you can realize how much will be taken to the part of the equity in the statement of financial position. So we can start with the first one there. So Safi brand marketing. So hope you've been able to take note of the additional information notes we've been able to make, so that in this case, you'll be able to remember how they'll end up having to affect, in this case, our either income statement or maybe statement of financial position. So take note how they'll end up having to affect maybe any item in the income statement or maybe in the statement of financial position. So we can start with the income statements for one of the brands there. So for one of the brands there, we can start with the income statement for one of the brands there. So part A. So I can be able to see Augustus is asking which class is this. So as I'd already indicated, so we have this particular class here, weekend only. Then this is my name. So I think Yeah, so so we can start with the Safi brand marketing account. So Safi brand marketing account, accounts. It is for the year ended 31st of December 2021. 31st of December 2021. So of course, what will end up having to come out of this particular account, it is how much profit, because you can be able to see showing the profit or loss. So we just want to realize the profits or loss realized on this brand. So because they are producing coffee, so this particular coffee, there's this brand. So how much profit was actually realized out of this particular brand? How much profit was actually realized out of this particular brand? And of course, most obviously, you know, when you're having to talk about having to realize profit, then you are getting the difference between maybe in this case the sales, maybe cost of sales, and maybe in this case the expenses. So of course, for the sales, we can start with the sales. So the normal format for getting profits or any profit is start with the sales. Then of course, now in this case, maybe reduce the cost of sales. Then of course, in this case, get the expense, reduce the expenses. Then of course, you'll be able to realize the profit. So for the sales, for this one, you can be able to see, we're having to be told in note number 1. So Bora Limited markets Safi and Mzuri brands for Marula. On 31st of December, Bora Limited sold Safi and Mzuri brands for 175,000. So we can be able to put shillings in thousands. So the sales in this case that were realized for this particular brand was actually 175,000 USD. 175,000 USD. So it is actually 175,000 USD. But now remember what we said in note number 1, in our notes number 1, we said that these particular dollars were having to be transferred into the Kenyan shilling account for this cooperative society. So we'll be able to convert them at a rate of 100, because this was actually the prevailing rate. It was actually the prevailing rate at this particular date. So if you do the math, what do you get? If you do the math there, what do you get as the total sales? If you do the math, what do you get as the total sales? If you do the math, what do you get as the total sales for Safi? The math. So I hope you have your calculator, so you can be able to just calculate and indicate in the chat. What are you having to get? What are you having to get if you do the math? Comrade, if you do the math, remember in this case, we've already been able to reduce this one into thousands. So you get 17.5 million, which basically in this case, it is 17,500, 17,500. So thank you very much, 17,500. And then, of course, on this particular brand, there were some expenses incurred. For example, if you look in our trio balance, the first items there, on having to market this particular, for example, brand, they incurred some expenses. And of course, those are the only expenses you're having to see. So you less the expenses, less the expenses. So the first expense you can be able to see in our trio balance. In our trio balance, you can see marketing expenses. You can see marketing. So we had the marketing expenses, which was actually 640. We had in this case materials. We had materials still having to be incurred on having to sell out this brand. It was 640. Then of course, this one was 680. Apart from materials, we have wages. So wages incurred, maybe these were basically wages having to be paid to the salesman. So this one is 900. So what is the total? What is the total of the expenses? What is the total of the expenses? What is the total of expenses? What is the total for the expenses? What is the total for the expenses? What is the total for the expenses? For materials, it is 860. Yeah, so for material, thank you very much. For materials, it is 860. 860. So the total you are getting, 2,400. Yes, 2,400, 2,400, 2,400. So if you less, that simply means that in this case, the profits realized, the profits realized here is how much? So you get the difference between the two. I think you'll get 15,100, 15,100. You'll get 15,100. So that is what you'll be able to get as what was part of what remained after the sales. But now, if you look at the first paragraph there, so Safi and they are selling what? Safi and Mzuri on behalf of the members. Just there on the first paragraph in the question, as per the society's bylaws, the society is allowed to retain 20% of sales from Safi and Mzuri for operations and pay the balance to members. And pay the balance to what? To the members. And pay the balance to the members. And pay the balance to the members. So in this case, payment due to members, because they'll only be able to retain 20%. So we'll have payment due to members. So we'll have out of these 15,100, out of the sales, that is these ones, 80% will have to be retained. So we have in this case payment due to members, payment due to members out of the sales, payment due to members out of the sales will likely be 80% multiplied by 17,500. 17,500. So that will come to how much? So 17,500. 17,500. 17,500. You get, I think, 14,000. So it will be 14,000. Yes, thank you very much. 14,000. So that means in this case, what is remaining out of these amounts will basically go to what? Will go to the operations. So basically operational expenses. So operational expenses, the amount having to remain, or ideally out of these, you remain with what? 3,500. So 3,500 minus all these expenses. Then in this case, what is actually also having to remain, the 20% will go to what? To the operational expenses, which basically in this case would be 1,100. So that in this case, the total basically there remains to be 15,100. So 80% of this amount goes to payment to members. Then what remains as the 20% will be part of the operational what? Expenses. Will likely basically be part of what? The operational expense. So ideally this one will likely go to the P&L account, as part of the operational expenses. And of course this one, since it is an amount they actually yet to pay out, it will likely basically go to be part of what? Maybe it will likely basically, this particular 17,500 will likely basically go to be part of what the items that we'll be able to include in the balance sheet. So that is basically in this case regarding the Safi brand marketing account, profit or loss realized out of this particular what? Brand. So part of these amounts will be paid to the members. Part of what will end up having to remain will go to the operational expenses. Then we have part B. So that is the other brand. So the other brand, so part B of the question, I wanted us to look at the other brand. So the other brand that is there. So that is in this case, Mzuri marketing brand account. Mzuri marketing brand account. So it is for the year ended 31st of December 2021. So still just the same format, no difference. So we can start with our sales. So what were the sales for Mzuri marketing brand? So the sales for Mzuri marketing brand, remember in this case, they were in dollars, but we've been able to say you have to convert them into Kenyan shillings because this agency, they were depositing the money in Kenyan shillings. So here they realized how much? 11.53 or 115,300 USD multiplied by 100. So what are you realizing as the sales? What are the sales realized from this brand? What are the sales realized from this brand? The sales realized from this brand. The sales, Gitari, the sales realized from this brand, Gitari, the sales. I can see you are saying 11.5 million, 11.5. I don't know whether, comrade, you're okay. Is it 11.53 or I think it is 11.53. It is 11.53 million. So 11.53 million. You can be able to check, comrade, you can be able to check. It is 11.53. So 11,530,000. So we already put our figures in thousands. So don't wonder why in this case you are not putting the other zeros, because they are already up here. Then of course, less what? The expenses, less the expenses. And of course, now in this case, the expenses, we have what? Still marketing, materials, and wages. So we have marketing, materials, and of course you have what? The wages. If you look at our trio balance, then the marketing expenses were how much? 150. So the marketing expenses for this particular brand were 150,000. Then of course the materials was how much? Processing materials was 320,000. Then the wages, it was, I think, processing wages, it was actually 30. So the total there you are getting how much? Is it 500 or something? So the total is actually 500. Then the difference, I think you'll be able to get 11,030. Should be 11,030 or something. 11,030. But of course, now in this case, remember, we've been able to say out of the sales, these ones, they take 80%. They actually take 80%. And of course, in this case, pay to members. So payment due to members, the payment that will be due to members, will likely be 80% of the sales. That is 11,530 or 11,530,000, which I think you'll be able to get how much? Will be 92,240 from Gitari, 92,240. So then of course now in this case the retained profit and loss, or retained for operations, the 20% retained for operations, the other amount remaining will likely basically be retained for operations. So that will be 1806. So that the total here will likely basically give us 11,030 as here. So that is basically in this case what will happen regarding the Mzuri marketing brand account, the Mzuri marketing brand account. Then part C of the same question, so wanted us to prepare a statement of income. So a statement of income. So we can go to the statement of income. So we have in this case the cooperative society statement of income. Marula Farmers. So it is Marula Farmers. Marula Farmers cooperative society. Statement of income. Statement. It is for the year ended 31st of December 2021. 31st of December 2021. So you can put like that. Then of course, put shillings in thousands. Put shillings in thousands. Put shillings in thousands. The shillings in thousands there. So of course, now in this case, for this particular statement of income, so as we had already indicated in our format, you remember our format when we started, we said you start with what? In our format, when we started the session, we said you start with what, 10? We start with what? On the income statement. We start with the incomes. We start with what? The incomes. So we're going to start with what were realized as incomes for this particular what? Cooperative society, as incomes for this particular what? Cooperative society. So for the incomes in this case, if you go to the trio balance, they'll be found on which side of the trio balance? For the incomes, if you are basically looking at the trio balance in the question, you look at which side? You look at which, the debit or the credit? You look at entries where? On the credit side. You look at the entries on the credit side. So those entries on the credit side, part of them, maybe equity, it can be equity, it can be liabilities, or it can be what? It can be incomes. It can be incomes. So if you look at our trio balance, yes, look at our trio balance. In this case, we have, we have what? We have dividends from investments. You can see dividends from investments. Dividends from investment. You look at from ukiangalia tu kutoka juu, dividends from investments, it is how much? Dividends from investment is how much? Dividends from investment is how much? Dividends from investments made by this cooperative society. They invested out, but of course they got some monies. They got some monies. So it is how much as per the trio balance? Dividends from investment, exactly 470. Exactly, yes, 470. Yes, 470. 470. Then if you just look at still the trio balance, another item you're having to see of income, it is, you can see entrance fee. Are you able to see entrance fee? So there's actually entrance fee. Entrance fee of 300. Hope you can be able to see it. There's an entrance fee of 300. So still looking at the trio balance, hope you've been able to see the entrance fee there of 300. Another item, interest on loans to members. You have interest on loans to members. Interest on loans to members. So you have interests. The next item you can be able to see it is interest on loans to members. Interest on loans to members. I think you can be able to see, is it 35,890? So 35,890. You can see 35,890. Then another item I think you can be able to see. Go to see. I think there's no any other item, but of course, as per the first paragraph, the society is allowed to retain 20% of the sales from Musafi and Muzuri. So in this case, in the income realized out of selling Musafi and Muzuri, they were maintaining what? 20%. They were maintaining what? 20%. They were maintaining 20%. And of course, out of the sales of I think the first one is what? The first one is Safi, sales of Safi. What was maintained? So remember the other amount they are distributing, but out of these particular profits, they are maintaining something. They are maintaining something. So members deposit like be part of what? The equity. That be part of the equity. So members deposit, as by this case, cooperative raise their capital. So it will be part of the equity where. So it is the incomes. They deposit. Remember this case, for example, they'll tell you to make a deal or a minimum share contribution. So that in this case will go to part of the equity. So in this case, as per the sales of Safi, there were some amounts, the sales of Safi and there were some amounts which were actually maintained. For example, for Safi, how much did they maintain? They didn't distribute, but they actually maintained. So how much did they actually maintain? From our previous income, for Safi and Missouri, there were some amounts they distributed 80%, but because there were some having to be maintained. For Safi, it was how much? You're able to look at what you have been able to prepare. Yeah. You're having to say it is 1,100. You're having to say it is 1,100. Then, of course, for Missouri, it was how much? Comrade. Missouri, it was how much? For Missouri, it was how much? 18. So we can see it 1806. So those are ideally, I think, the incomes in this case have actually been realized out of this cooperative society. Yes, maybe you look at the credit side of the TRIO balance, and maybe the additional information, and you can be able to see something else, but I don't think that there's something else, because in this case, the items, credit side of the TRIO balance, you've already been able to look at them. That was that I think basically end of the you can be able to total, give us the total here. How much are you having to get? How much are you having to get? The total incomes realized before expenses for the society. The total incomes, I can see volume. I can see you're saying 39,566. 39,566. So I hope my volume is okay, because I can be able to see Comrade is complaining. 39,566. So it is 39,566. 39,566. So 39,566. So those were the incomes that were in this case realized by the cooperative society. So for us to realize the profit out of this statement of income, then we have to less what? The expenses. We have to do what? Less the expenses. So I hope you've been able to capture that particular part, that particular portion, because now in this case, I want to go to the expenses. I want to rub and go to the expenses. I want to go to the expenses. So I hope you've been able to capture it, because I want to go to the expenses, to the expenses. I want to go to the expenses, part of the expenses. I want to go to the part of the expenses, which might be a bit longer. So you less what? The expenses. You less 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 the expenses. And of course, most obviously or majorly actually advised in this case, if you're looking at the expenses, then you can start with the additional information. Try to find out whether there's actually any item that you might actually end up having to see or maybe realize. Maybe in this case, it was actually having to affect what? Maybe the expense, or maybe the items in the income statement. If, for example, in this case, if you look at note number 3. So note number 3, we said what? If you remember our notes we made, we said it will be part of what? It will be part of what? The expenses. And then, of course, it will be what? A liability, which is exactly what? Note number 3 is exactly what? Let's see whether we are together. Note number 3 is exactly what? That expense is what? That expense is what? The expense under note number 3. It is what? It is known as what? Audit fee. Yes, it is audit fee. It is actually audit fee. So you can start with that audit fee. Audit fee. So which is actually what? How much? It is actually 6 million. So it is actually 6 million. It is actually 6. You can be able to see it is 6 million. 6 million. Then you can look at another note. Staff salaries and wages amounting to 3.2 million had not been paid as at 31st of December 2021. So staff salaries and wages had not actually been paid. Staff salaries and wages had not actually been paid. So of course, now in this case, we have staff salaries and wages. Remember, in this case, if you look at any item, for example, in the additional information, you have also in this case to confirm in the TRIO balance, whether in this case there was any other amount regarding what? Staff salaries and actually what? Wages. So for example, in this case, if you look at the TRIO balance, how much are we having as the staff salaries, the salaries and actually wages? How much are we having as the salaries and wages? Because we have to total with the amount that in this case was actually outstanding at the end. So how much is there in the balance? It is 2290, 2290. But of course, if there's any amount outstanding at the year end, that simply means it does what? It increases how much was actually maybe the expense. So in this case, we add how much? We add how much? We add how much here? As per that particular note, add how much? How much are we going to add? as per that note, we add 3,200. So if you add 3,200, I think you'll get 5490. I think it could be 5490. So we are done with that particular additional info there. Then interest on members' deposits is to be provided for at 6086. Interest on members' deposits. So we say that will also be an expense. So interest from the additional information, interest, they paid out interest on members' deposits. So members' deposits, which was actually 6086. I think it's 6086, and I hope you can be able to see it. Then we look at the other note. So that was actually note number 4, not number 5, sorry. So as per the relevant ministry, so that one is actually basically affecting the appropriation account. So it doesn't have to come here. So once you are through, for example, in this case, with the additional information, and you look at the items it is affecting the trio balance, then we go back to the trio balance and pick out those expenses, which in this case, we are yet to knock out. We are yet in this case to knock out. So for example, now in this case, if you look at the trio balance, we have their traveling expenses. So we have traveling expenses, whereby in this case we have for staff, and then of course in this case we have for committee members. So the committee members. So this one will likely be 80. Then of course this one is actually what? It is actually 100. It is 100. So another item, if you go down there, you have bank charges. Or you can be able to see bank charges. You have the bank charges. So it is actually 200. So 200. So we have bank charges at 200. We have in this case bank interest. So probably there was actually a loan. In this case, there's actually a loan they actually ended up having to take. So they have bank interest. So bank interest, the bank interest, which I think it's 810, would be 810. 810, exactly 810. Then we have, apart from in this case, the bank interest, we have salaries and wages. I think we've been able to deal with it. Committee education expense, committee sitting allowance. So committee expenses, committee education. We have committee education and of course sitting allowance. So for the committee education, in this case, they incurred 1,000. They actually incurred 1,000. So committee education expense, they incurred 1,000. Committee sitting allowance, they incurred 1110. They incurred 1110. Then printing and stationery. So there's actually also printing and stationery. Hope you can be able to see here. Printing and stationery. That is 2050. 2050. So there's printing and stationery, which they incurred there, 2050. We have, I think, general meeting expenses. I think you can be able to see general meeting expenses. General meeting expenses. So all these ones basically are on the debit side. General meeting expenses, that is how much? 500. So you can be able to see it. 500. So apart from general meeting expenses, we also have members education. I think there's members education. So members education. So you can still, in this case, include members education. So just down there, so you can include the members education. So members education. I think, which they incurred, is it 1,500 or 1.5 million? So members education, 1.5 million. They incurred 1.5 million or 1,500 in thousands. We have entertainment. So these You can include down there. So you can go down there and include entertainment. So still entertainment for members, another expense. So just continue with your trio balance in your book there. So still in thousands. So what is entertainment? Entertainment was, I think 50,000. So it was actually 50,000. Then we have legal fees. Legal fees is another expense. This is probably money they paid to lawyers to maybe facilitate their workings. So that is 400. It's still an expense. 400. So 400. So you continue to look at the debit side of the trio balance, whether there's actually any other expense. Cash in hand is an asset. Wakulima Bank savings, an asset. Investment in Wakulima Bank, an asset. Receivables, an asset. Office equipment, an asset. So I think we've been able to capture, I think, all the expenses, unless there is one that we've missed out. Unless there's any that we've missed out, but I think we've been able to capture all of them. So I don't know what you are getting as the total. Remember, I think this one was supposed to be in this column. These were supposed to be in this column. So sorry about that. It was supposed to be in this column. So that in this case, when you get the total, you put it in this column. So what is the total expenses you're having to get? The total expenses you're having to get. What is the total for the expenses? 25,376. 25,376. So this 25,376, you can be able to minus from what you got up there. It was 39,566, whereby in this case you'll be able to get the net profit that was realized by this cooperative society. So net profit realized, how much are you having to get? The net profit realized, how much are you having to get? 14,190. So 14,190, 14,190,000. 14,190,000. 14,190,000. But remember, in this case, we've been able to say, after you do the income statement, then in this case, you end up having to prepare another account. You are calling what? An appropriation account. You end up having to prepare another account. You're having to call what? An appropriation account. Whereby now, in this case, in the appropriation account, you'll be able to take this particular profit realized here, you appropriate, whereby part of these profits could end up having to be distributed as part of what maybe the dividends, or for example, now in this case, they could end up having to transfer them into the statutory what? Reserve. And how much have we been able to say they'll transfer to the statutory reserves? How much have we been able to say they'll transfer to the statutory reserves? How much have we been able to say they'll transfer to the statutory reserves? This is actually a profit, so it is not a loss. So Gitari, you shouldn't actually be getting a loss. It is a positive figure. It is a positive figure. So Gitari, because remember in the incomes, we got a figure of 30, is it 35 something? So 35 or what? 39 something. So I think we got 39 something. So if you minus the expenses here, you should be able to get this one as a positive figure. So hope you are together in this case, Gitari. Sure, it is a profit. It is actually a profit. So we've been able to say out of these profits, according to the relevant requirement, cooperative societies will transfer 20% of this one to what? To the statutory reserves. So, and of course, in this case, that one comes under when you're having to do appropriate, you do any appropriation kama kwanza kudistribute. So kama walilipa dividends, utapata net profit, then utaanza kudistribute your dividends kama walilipa. But if you are told in this case, there was no dividends paid, like in our question, they haven't mentioned about it. But of course, they're talking about what? Reserve. They're talking about what? Reserve. So in this case, you can be able to look at the appropriation of this profit. Because now in this case, the profits retained at the end are the ones that in this case will be able to go in the statement of what? Financial position as retained profits for the year under the part of equity. So in this case, the appropriation accounts, look at Wakulima Cooperatives. So is it Wakulima or is what? Is Marula Farmers Cooperative. Marula Farmers Coop Society, Marula Farmers Coop Society, appropriation account. It is for which year ended? It's actually for the year ended 31st of December 2021. So in this case, you'll be able to start with the profits for the year. So the profit for the year that has been realized is how much? Profit realized for the year. Profit for the year realized is how much? So remember, because our figures are actually what? In thousands. Our figures are actually in thousands. The profit realized for the year is how much? Volume. So someone is talking about volume. Volume. Am I audible? Am I audible? Please confirm. Am I audible? Am I audible? The others can be able to confirm because Comrade is saying, adjust volume, Mwalimu. Just confirm whether in this case I'm still audible. Just confirm whether I'm still audible. Better. You're saying better. I don't know what about the others. So because I can't see the complaint from the others. So I think I'm much better. So in this case, profits for the year, we have gotten how much? We've gotten 14,190. So 14,190. Now this profit is the one we start having to do what appropriate. So remember in this case, in our illustration, or basically in this case, when we're having to explain how you prepare the account. Said in this case for this one, you will less profits. Maybe what you could end up having to dividends. They pay dividends. For example, for SACCOs, they pay what dividends? They pay dividends, you'll be able to less. That dividend is normally paid out. So it's able to lessen the net profit by the year end. But because in our question, there is no mentioning about what net what of the dividend. But of course, in this case, been told that in our last the notes we are having to make note number 6, that when we do the appropriation, 20% is able to take them to the statutory reserve fund. The statutory reserve fund to the statutory reserve fund. Adjust volume. Adjust volume. Check on your network. Check on your network. What about now? Mani Vincent. Check on your network. What about right now? What about right now? What about right now? It is better. It is better. I don't know what is happening. Maybe my mic is shaking. Maybe my mic is shaking. So less, in case there were any dividends, you can be able to less. If there are any dividends, you can be able to less. But in our question, they are not there. But of course, there is a transfer to statutory reserve fund, transfer to statutory reserve fund, transfer to statutory reserve fund, which now in this case will be 20% of this. It will be 20% multiplied by 14,190. So what do you get? 20% of 14,190. What do you get? For 20% of 14,190. What do you get? 20% of 14,190, you get 2838. So 2838. So you less 2838. So that comes to what? So the difference here comes to, the difference there comes to how much? The difference there comes to 11,352. So thank you very much. 11,352. But now in this case, remember, if you look at our trio balance, there were those profits that were carried forward from the previous year. So in this case, there were profits retained from the previous year. So they were how much? If you look at our trio balance, there are those profits that in this case were carried forward from the previous year. Someone is saying 13,740. It is 60/50. So you can be able to see some retained profits in the trio balance. So the appropriation profits brought down. So appropriation profits brought down. So you add the appropriation profits brought down. In the trio balance, you can be able to see a figure of 60/50. So therefore, in this case, the retained appropriation profits carried forward for this particular year. So retained appropriation profits, or basically appropriation profits carried forward for our current year, appropriation profits, which will now actually end up having to appear maybe in the next year's trio balance. It will actually be how much? The total. So you have to total 17,402. 17,402. And therefore, this one will actually appear as part of the equity. Part of the equity when you are preparing the balance sheet. So you normally carry the profits and put it as part of the equity in the balance sheet. So this particular profit here will go to the statement of financial position, when you'll basically, in this case, be looking at the part of equity. At the part of what? Equity. At the part of 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 what? Equity. At the part of what? Equity. So the appropriation profits will go there. So I think for the balance sheet now, in this case, you can be able to try. So try at your end, simply because you've gotten all the figures. So what is remaining as assets in the trio balance, basically put them as assets where? In the statement of financial position. So you can be able to try to come up with the balance sheet. And of course, in this case, it should be able to balance. It should be able to balance. It should be able to balance. So once you move all the items, it should actually be able to balance. So otherwise, I'll end up having to end there for today for our free class. So thank you very much for having been able to join. So as I've already been able to indicate earlier, so this was actually financial reporting coming to you courtesy of how will we treat the statutory reserve fund in the trio balance. So you'll be able to add this particular amount to the statutory reserve fund. So the statutory reserve fund, which is actually, is it 13,740? So remember, the statutory reserve fund will still actually go to be part of the equity in the balance sheet. So simply because there was an additional amount added on it, that is this amount, you'll add. So sasa ile utakuwa unatengeneza balance sheet. Remember hapo kwa part of equity tumesema unaweka hizo reserves. So sasa ile utakuwa unaweka hizo reserves hapo, utaongeza hii amount, sababu hii ilikuwa waliongezea. Because each and every year wanaambiwa out of zile profits realize, lazima mchukue some amount mweke kwa hako ka reserve. So already kuna zile zilikuwa zenye ziko kwa trio balance, but now they added more. For this year walichukua 20% of the profits, they added on them. So in this case, when you'll be preparing the balance sheet at the end of the year, take this amount and add on it. So ile amount utaweka kwa equity, part of the equity, utachukua hiyo amount uongeze hii. So to get the correct figure in terms of what the reserves, the statutory reserve. The reserves to the statutory reserves, you'll add this one as you prepare the balance sheet. As we prepare the balance sheet. So I think we can end there for now. So try the balance sheet, and of course now in this case, you can be able to see whether it is actually having to balance or not. Otherwise, thank you very much for having been able to join the session. So as I had already indicated earlier, the session was coming to you courtesy of RCM online. You can always get connected to our sessions whenever you reach out to us through our customer care numbers, which I had actually indicated earlier. So this one, 0719-525,000. Or alternatively, you can be able to call this one. You'll likely be assisted as to how you can be able to join the classes. So remember, in this case, as I had already indicated earlier, so you have options for financial reporting. You can either choose to go for early morning, which is an option we have. You can choose to go for evening, or in this case, you can decide to choose the weekend only program. Weekend only program. Otherwise, thank you very much. Unless there's actually a burning question, you can actually be able to ask. Otherwise, probably in this case, we'll be able to meet in another session, maybe coming weekend. This has actually been my name. Thank you very much. Enjoy your afternoon. Enjoy the weekend. Enjoy the weekend.